Donald Trump made headlines last month with a Truth Social post expressing strong support for Bitcoin. In his post, Trump acknowledged the geopolitical significance of the world's largest cryptocurrency, cautioning that policies hindering Bitcoin would benefit adversaries like China and Russia. This statement has positioned Trump as the first pro-Bitcoin nominee of a major political party and brought attention to the idea of classifying Bitcoin as a strategic reserve asset. The conversation around Bitcoin as a strategic reserve asset is gaining momentum in policy circles, driven by Bitcoin-friendly political figures. Notably, former presidential candidate Vivek Ramaswamy has been advising Trump on digital assets since January. Ramaswamy proposed that the dollar be backed by a basket of commodities, potentially including Bitcoin, to curb inflation by pegging the dollar to deflationary assets. Ramaswamy's proposal aims to stabilize the dollar's value over time, utilizing the inherently deflationary nature of Bitcoin and other hard assets. Independent presidential candidate Robert F. Kennedy Jr. has suggested a similar approach. He has advocated for U.S. Treasury bills to be partially backed by assets like gold, silver, platinum, or Bitcoin. Kennedy's proposal is designed to leverage the stability of these assets to maintain the dollar's value and reduce the risk of inflation, thereby strengthening the overall economy. Senator Cynthia Lummis, known as the Crypto Queen of Congress, has also championed Bitcoin's potential benefits. In February 2022, she proposed that the Federal Reserve diversify its $40 billion in foreign currency holdings by adding Bitcoin. Lummis continues to support the idea, highlighting Bitcoin's potential as a valuable component of the nation's financial portfolio. She believes that integrating Bitcoin into the National Reserve could provide a hedge against economic instability and enhance the country's financial resilience. Trump's recent remarks have further ignited discussions about Bitcoin's role in national strategy. In response to Trump's statement, Senator Lummis emphasized Bitcoin's value as an investment and its benefits for diversifying the nation's financial holdings. She stated, "Bitcoin is an incredible store of value, and I certainly see the benefits of our country diversifying its investments." Lummis's endorsement adds significant weight to the argument for considering Bitcoin as a strategic reserve asset. To understand how Bitcoin could strengthen the United States' fiscal health and geopolitical position, experts like Alex Thorne, head of research at Galaxy Digital, offer valuable insights. Thorne believes Bitcoin, as a decentralized and scarce commodity, could play an increasingly significant role in global finance and geopolitics. He compares the competition for Bitcoin to that for other scarce resources like oil and gold, suggesting that nations will compete to secure Bitcoin due to its potential high value and limited supply. Jurian Timmer, Fidelity's director of global macro, has described Bitcoin as exponential gold. He predicts that if Bitcoin were to achieve parity with gold's current market cap, a single Bitcoin could be worth approximately $700,000, more than 10 times its current value. This potential for substantial returns makes early accumulation of Bitcoin appealing for sovereign states, providing a strategic advantage for those who act quickly. The United States currently leads in Bitcoin holdings among nation-states, having accumulated substantial amounts through seizures from illicit activities over the past decade. It also boasts the highest number of network nodes, hash rate, and Bitcoin intellectual capital globally. If Trump wins the presidency, the U.S. could see its first pro-Bitcoin administration, further advancing the nation's position in the digital gold rush. This would place the United States in a strong position to capitalize on Bitcoin's growing importance in the global financial system. MicroStrategy, a technology company, revitalized its relevance by accumulating Bitcoin as a treasury reserve asset, significantly boosting its stock price by over 900% since its initial announcement in August 2020. The company currently owns 226,000 Bitcoin, more than the United States or any other country. MicroStrategy's success demonstrates the potential benefits of adopting Bitcoin as a strategic reserve asset, suggesting that this approach could be replicated on a nation-state level. El Salvador serves as another compelling example. In 2021, President Nayib Bukele declared Bitcoin legal tender and announced that the country would begin purchasing Bitcoin as a treasury reserve asset. El Salvador has seen positive results, with its Bitcoin investments up about 50% in the lead-up to the bull market. President Bukele has made clear his intentions to hold Bitcoin for the long term, stating, "We won't sell, of course. At the end, 1 BTC once 1 BTC." These examples suggest that nation-states could adopt similar strategies to enhance their economic stability and growth. Matthew Pines from the Bitcoin Policy Institute highlights the potential benefits and challenges of adopting Bitcoin as a strategic reserve asset. Among the benefits, Pines notes that this move could position the United States well against authoritarian challenges, considering their own hard asset diversification and hedging strategies. Additionally, it would signal the U.S.'s intention to lead emerging open digital finance networks. However, Pines also acknowledges the challenges, including regulatory hurdles, introducing additional uncertainty into the U.S. Treasury market, and potential political opposition that could undermine the strategy's sustainability. To mitigate uncertainties, policymakers could pair Bitcoin adoption with the promotion of dollar-based stablecoins. Stablecoin providers today are the 18th largest holders of U.S. debt, holding approximately $120 billion in U.S. Treasury notes. This figure surpasses the holdings of some of the United States' largest trading partners, including Germany and South Korea. The brokerage firm Bernstein predicts that the stablecoin market will grow exponentially over the coming decade, reaching a total market cap of $3 trillion by 2028. Former Speaker of the House Paul Ryan has written about the potential of USD stablecoins to create unprecedented demand for U.S. treasuries and stave off a debt crisis. According to Ryan, U.S. policymakers must recognize stablecoins as a generational opportunity to expand dollarization and support the market for treasuries. A holistic digital asset strategy incorporating both Bitcoin and stablecoins could enhance the U.S. economy's resilience and strengthen trust in treasury notes backed by the full faith and credit of the U.S. government. This comprehensive approach may pave the way for a future where Bitcoin and the dollar grow together, bolstering the nation's fiscal health and geopolitical standing. As the United States continues to lead in Bitcoin holdings and digital asset innovation, it has the potential to set a precedent for other nations, positioning itself as a pioneer in the digital financial landscape. If you enjoyed this video, please hit the like button and subscribe for more updates on cryptocurrency and financial news.